Okay, good morning, ARMR Insiders. Good morning to all ARMR followers. I love chatting with you guys on Wednesdays. It's Open Mic Wednesday. Any questions you have while I'm going on about our morning meeting, throw into the comments section, and I'll try to get to it before the close. If you watch this later and you got questions, throw it in the comment section, and I'll be checking it during the day and answering if I can. All right, so this is our morning meeting. We're running a virtual hedge fund. ARMR Report subscribers, ARMR Insiders are all part of this hedge fund. You have to think of yourself as a portfolio manager on the desk. I'm going to share with you our macro picture using armrAlgos. The easiest way to distill that information is to call it the risk monitor. Risk monitor, red, yellow, or green. We're yellow right now, and we're on the edge of flipping green or red, and we just don't know yet. Okay, so we took some decisive action yesterday using our day trading tools that led to a rip into the close, and it's put us in a very good position. So I'm going to go over how our flagship portfolio is structured and how our three portfolios are structured. And then the idea is for you to take the information. This is about how I run my own capital personally, how I manage capital for investors. I don't know your risk tolerance, your goals, your strategy, all that stuff. You have to be a portfolio manager on the hedge fund desk. Take the information, make it your own, make your own decisions. Take responsibility for the success. Accept the mistakes as yours and fix them. At the end of the day, only you can be the smart money of your own assets. All right, so let's dive in. I always like to start first with the macro picture and our risk monitor because 8 out of 10 stocks follow the markets. That's a no-brainer. All right, so we want to get on the right side of the swing cycle when we're making new investments. So let's take a look at the S&P. We have 10 indexes we use to make up our risk monitor. The S&P is, of course, the most important, the weighted S&P. We're going to look at the equally weighted in a minute. We're going to look at the NASDAQ 100 in a minute, but let's just focus on this right here. So you can see that a risk monitor green down here in April, which led to so far what's been a really good year for us, okay? That's a no-brainer entry point. It's a reward to risk entry point. You can just see it on the chart. It just sets up correctly. And it's at a time where there's tons of fear in the marketplace, right? VIX is high. People are afraid. Bang, we get the risk on green. We make a lot of money. Up here, it gets a lot trickier. The risk monitor is yellow right now. So why is it that the ARMR Macro fund is 100% long right now? A good way to judge the color changes for our macro fund. By the way, the macro fund, all we do is trade the indexes. And we usually use, always use double the indexes, okay? So we're putting on ETFs that are twice the performance of the indexes, and we use different indexes at different times in the cycle that we think will create alpha, okay? So I would say we always use the S&P, and then around that cog of the wheel, we have spokes that we think will outperform. So why did we get aggressively long yesterday? It's the Powell pivot on Friday is the key to this whole setup. It's hard to argue that we're going to have a negative market between now and the close when we have money supply, the close of the year, now and the close of the year, when we have money supply increasing, the Fed finally cutting rates, who knows how many times, 2, 3 times by the end of the year, we don't know. The major pivot on Friday, the biggest takeaway about everything that was said can be boiled down to one basic statement I'm going to paraphrase. Powell said, we're more concerned about employment, and we don't care if inflation goes above 2%. That's what he said. I mean, I'm paraphrasing, okay? The gloves are off. The Fed's going to cut rates. You have rates being cut, money supply going up, and the Trump administration has floated the idea of stimulus checks. Then we all know what happens when stimulus checks get in the hands of investors. We saw it in 2020. So we're at this weird point. I know people out there are writing about how VIX is incredibly, crushed and how huge the short position is in VIX. And I just find that information worthless. Worthless. VIX is not a predictive crystal ball of what's going to happen next. It's telling you the situation right now. So people are asking the question, well, is it complacency? Man, I've seen markets complacent for months. It's going to take something unknown. This is the key here when it comes to managing money. It's going to be something unknown that jerks it the other way. And you can't run money trying to guess when something unknown is going to happen. So what I look at when I see VIX crushed to that degree is that it's a reflection of a massive bull market that we're in. Why? Money supply is going up. Now the Fed's pivoted. He's going to be cutting rates. And stimulus checks might hit people's bank accounts. This isn't rocket science. But you look at this chart here, and buying the market up here doesn't look as good as buying the market down here, right? Now, you and I have earned the right to take the risk because we're up big this year. Okay, so we've earned the right to take the risk. And we just have to execute the strategy. It doesn't make me feel good putting capital to work up here. I love putting capital to work in April. That's a no-brainer. But it's not a question of my feelings. Okay, it's a question of executing a strategy. And it's really very simple. When the ARMR algos of these 10 indexes give us risk on entry points, there's only one animal that can make that happen, and that's institutional investors plowing money in. I saw this morning, story hit the tape. Stock buybacks have hit the $1 trillion mark faster than, was it any other year in history? Something like that. Don't quote me on that. But let's just say it's wicked fast, which is another piece to the puzzle why the market keeps melting up. So what happened yesterday? Risk monitor is still yellow. It's going to flip green if we close above the high of the Powell pivot on Friday. It will flip green. Okay. Our focus, of course, is on the S&P. So our macro fund, we got long the S&P. I'm going to take you into our carry trade now. We call it the carry trade. We carry treasury bills overnight all the time in this one portfolio. And all we do is trade the S&P. And we trade triple the S&P. And we got on that trade. So you're looking at a 3-minute chart now. Blue bars up, red bars down. All the lines are an ARMR algorithm we call the price movement profiler. Okay. VWAP is at the core, the ARMR VWAP. Okay. But we were getting long right in here around 1017, right in the 10 o'clock to 1017 areas where we got long the market. And while we were doing that in our carry portfolio, I set this up for you guys in the morning meeting yesterday and the day before. I said, if we get this set up in the morning on the carry trade, I'm going to go to the macro fund, which is 90% cash, and I'm going to put all the cash to work. And I'm going to do it 4 indexes, but I really carved it back to 3. Double the S&P weighted, double the small cap weighted, double the Dow weighted. I'm not buying the NASDAQ 100 right now. Nothing wrong with it. I bet it goes higher with the rest of the market, but I'm talking about where the alpha is. I think the alpha between here and the end of the year is small caps and industrials. And of course, my biggest position is the S&P 500, okay, weighted. So the weighted S&P 500 captures a lot of what the NASDAQ 100 gets. So I don't need extra. In April, the whole macro fund was S&P weighted, NASDAQ weighted, because I wanted the safety of that. And that's where the alpha was. Between now and the end of the year with the Fed cutting rates, I think the alpha is going to shift a bit. And so I focused the macro fund there. And so the object of day trading the macro fund yesterday was to get into the position, the delicious position we're in now. We held those positions overnight. Our stop is the low of the day yesterday, which is right around where we bought all these positions. So our risk is small. Reward is risk monitor goes green. The market blows out this week and we're already long. We don't have to do anything. So when you see the risk monitor turn green, it doesn't mean we're going to start scrambling. The flagship fund is already 80% long. We got 20% cash. Risk monitor goes green in the flagship fund, and I'll decide how I want to put that cash to work. In some portfolios that I manage, I will use the indexes. Probably I'll use small caps in the Dow. I want the focus on industrials and small caps. So you might see me put those two positions on, maybe. But I'm kind of leaning in the flagship fund, so you can understand the difference between flagship and these other portfolios. I run a family office like a hedge fund, okay? I run a family office. And that family office has 4 portfolios. We day trade the S&P, we swing trade the indexes, then we have 2 portfolios. For lack of a better way to explain it, 2 portfolios, one aggressive growth, one not aggressive growth, okay? So I'll explain that some other time, but we don't have time to go over that right now. So we have one portfolio where we'll go after stocks that have more volatility, right? And then we have another portfolio where we manage the volatility profile, okay? So in the flagship fund, we got like 51.5% of the portfolio in assets where the volatility is commensurate to the risk we're willing to take. And we got about 18.5% of the portfolio in aggressive volatile stocks, okay? So that's our kind of our weighting there. We've got 10% precious metals, and we're sitting at 20% cash right now. So that last 20%, we'll see what's going on in the market. We might increase the size of positions we already have, or we might add a couple new names around the edges. I think the alpha between now and the end of the year may not be, for my flagship fund, may not be in double indexes. It may be in filling out the portfolio in these investments, okay? So let's go over the highlighted stock of the day today. And I'm not telling you something that you probably don't already know. Anybody awake right now can look at this chart pattern of Tesla and see that it's breaking out, okay? So the highlighted stock of the day today has to be Tesla. It has to be. We've been talking about it on the desk for a while now. There's the chart. Take a look at it again. Guys, this is an example of the best chart wins. I'm not going to spend time today talking about Tesla and debating with you robo-taxis and all the other things we could talk about when it comes to Elon Musk and what he's doing and how crazy he might be and all this other stuff. I don't care about it. On this trading desk, I like to say to you guys, at the end of the day, we only have so much capital to invest. So we got a bunch of ideas from the whiteboard. Which ones are we going to buy at the end of the day? If they're on the whiteboard, we like the investment. We've done our research. We like the investment. So I look at them all the same. And I say, at the end of the day, the best chart wins. You just can't argue with this chart pattern. And to be fair, we've earned the right to take this risk on our trading desk. We've traded Tesla so well since last November that we're going to continue doing it, and we're willing to get stopped out on a trade. We expect we will at some point. We're swing trading Tesla. At some point, we get on a trade and it rips higher. We might not swing trade. It might turn into an investment. We don't know when that is. Okay, we use stops. We follow that up with stops. We get stopped out. Here's an example. We got long Tesla right in here, actually right on election night. It ripped higher. We booked profit right around the high. Cratered, set up another bottom, Buy trigger again, got long, popped, booked a profit again. Now it's gone through another pennant formation. armrAlgo buy triggers here and here. We have to be long the asset to complete this investment cycle. Breaks down, we get stopped out, trades over. I'm okay with that. We've earned the right to do that. Blows out from here for whatever reasons. You know, you want me to come up with a fundamental reason? Who knows if the analysts are going to be right? But Deutsche Bank today is calling for order flow that's going to surge for Tesla in China. They expect it to be up 100% month over month. Who knows what the reason is? I don't really care. Best chart wins. We're long Tesla. We're going to use, in this particular case, end of day, end of week stops. So in positions with a certain volatility profile, we use intraday, end of day stops. Other stocks, based on the volatility profile, end of day, end of week stops. So at the end of the day, we might cut it in half if it's not acting well, below the stop. And at the end of the week, if it's still below the stop, position's out. Okay. So that's the highlighted stock of the day. Let me give you another highlighted stock of the day. Squarely in the crosshairs, completely and utterly in the crosshairs of the battle between, you know, the crazy, loud, woke left ideas versus the reality of what the vast, silent majority wants. That's the investment in AEO. It depends on what you want. If you believe that the vast, silent majority and what they want is beginning to see the pendulum swing back their direction, then the entry point on AEO is a no-brainer here. Again, we use stops. Okay. Goes below the stop, trades over. The loud still win. Okay. But if it breaks out back above the 200-day moving average from here, the reward from here is worth the risk. Stock's up about 4.5%, 5% this morning. Story about how they're working with Travis Kelce. Look, he just proposed Taylor Swift. How's that conversation going around the dinner table? I mean, I don't know. But now he's working with AEO. So the stock's up 4.5%, 5% today. It hasn't even broken out yet. So what I'm doing is I own it inside the base, closer to the stop. And if it ever breaks out above 14, the real game starts. And if it breaks out above 14, I'd probably increase the size. So I've got an average size, maybe a minimum size in here for portfolios I'm running, just minimum size. Breaks above 14, then we know what's happening. Stampede's coming, and I probably increase the size. Right now it's trading $12.70. So it's still inside the range, even though it's going to be up a little bit this morning. All right. Got any questions? I'm happy to answer them. But that is a wrap on our morning meeting. I shared with you our thoughts on the cannabis couch yesterday. You could find that on our YouTube channel, which you should be subscribed to by now. I imagine a number of you are, but if not, go ahead and subscribe to it. What I do during the week is we have morning meetings every morning, just like this, with ARMR Insiders, ARMR Report subscribers. And then what I'll tend to do is cut out the highlight and share it with all of you on YouTube. It might be a short 5 to 7 minute clip. And so yesterday I did that with a cannabis for you. I think I answered some key questions there that you might find interesting. So take a look at that on the YouTube page. If you haven't subscribed yet, go ahead and subscribe. If you want to be an ARMR Insider, an ARMR Report subscriber, you could consider that as well. Go to our website, armrinvesting.com, armrinvesting.com. Any questions, throw it in the comment section. I'll check it throughout the day and try to answer it for you. ARMR Insiders, I'll see you at 9:30. We'll get our live trading desk started, and we'll trade together all day. First thing we're doing, the reason we're on all day, is that we're looking for carry trades. We get an opportunity in the S&P like we did yesterday. We'll look to put on triple the S&P in that portfolio. NVIDIA tonight probably tips the scales. I think everyone's looking for a good number. On the flip side, seems like the China business is in flux. And so I bet a lot of people listen to the conference call and how they're going to handle what looks like what will be a decline in business with China, right? So when you're priced to perfection, like NVIDIA is right here, okay, it's priced to perfection. Blows out earnings and revenue like everyone, God forbid it doesn't, right? Stock traders, we all know that. But let's say it beats the numbers, whatever, stock up in the aftermarket, down by the morning. If it's doing that, then there's something going on probably with the China business, who knows? So that's in the focus today. Oh, also on our desk, on our whiteboard, one of our favorite cybersecurity names is CrowdStrike. I don't own it right now. They announced earnings today. And God knows I've been hunting Pure Storage forever, and I'm just not willing to own it into earnings right now. But they announced earnings tonight also. So if I have to pay for it, I'll pay up for it. If it could break out of this pattern, I'll pay up for it. But I'm not going to hold this one into earnings. Micron, we own in the portfolio. SanDisk, I'm looking to add to the portfolio. This is a spinoff from Western Digital. That's a perfect pennant. I love spinoffs. And along with those two is Pure Storage. Those are the guys who are providing storage for cloud and for the AI explosion. Okay. So these are three storage names I've got my eye on. One I own right now. The other two I may own. So put them at the top of my whiteboard, see how they react to earnings tonight. All right. Anyway, guys, I appreciate you spending time with me. Helps me order my own thinking. I wish you all much success in your trading today. Armor Insiders, I'll see you 9:30. Everyone have a great trading session. And remember, at the end of the day, whatever you've heard me say or anybody else out there, it's just a guide. It's just how I run my own money. It's not the proverbial investment advice. How could I give you advice? I don't know you. You got to take responsibility for your own assets. Think for yourself and be the smart money.